Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is February 6, 2024. In this video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Yes, we had some breaks in those currency pairs. Let's see what the charts are saying today. We'll start off by taking a look at the euro versus US dollar. And in trading yesterday, the price finally broke below the 100-day moving average. We did trade above and below it to start the trading day. This is a 4-hour chart, by the way, before moving to the downside. And that move to the downside did come and stall near this swing level right through here, where at the 1.0723 level, where we had a different swing high right here, moved down, broke through that level, and came back down to that level. Found support buyers here, and again, nearly said yesterday. In trading here today, what are we doing? We're continuing to hold support against that level. Just below that level is a 61.8% retracement of the move up from the October low to the December high. That level comes in 1.0712. So getting below 107.23, getting below 1.0712 would increase the bearish buys for this currency pair. Absent that, the buyers can lean against this level, but they still have work to do. That work involves getting back above the 100-day moving average at 1.0777. Again, yesterday the price fell below that and stayed below that level. It was the first break below that level since back here in the month of December. So that 100-day moving average is now resistance for the euro versus US dollar. Be aware, be prepared, but right now the sellers are more in control with work to do to get below the 107.23 level. 107.12 retracement level. On a move below those levels, I'm going to look toward this swing level right through here, where we had a number of different swing lows and swing highs before the market took off to the upside here. So that area comes between 1.0655 and 1.0675. Let's take a look at the dollar versus yen, and this currency pair tried to make a break yesterday. This is the hourly chart. The break occurred getting above the 148.80 level. That's this high right here, going back to earlier in January. The price high came in at 148.88 before rotating back to the downside and closing back below that level and trading here today. The Asian session initially saw a move to the downside and then a rotation back to the upside, where we found again resistance sellers again. So 148.80 levels before rotating back to the downside. We are currently trading at 148.61, which puts the price above this swing area going here between 148.45 and 148.59, but just barely. If the price were to move back below the 148.45 level, we did earlier today, but could not sustain the momentum. But if we get back below that level, 148.45, I could see further selling pressure just on the fact that the price can't get above the 148.80 level and stay above that level. If it can't go higher, then it has to go lower and kind of retrace to see if we can find support buyers, maybe against the 148.00 level or 08 level, maybe down here at the 38.2% retracement, the last move to the upside at 74 level, maybe against this cluster of moving averages here and the old broken trend line around the 148. I guess that's around the 60-ish type level. Those levels on the downside for the dollar versus yen if we see continued selling. But on the top side, get above the 148.80 level, get above the 88 level, and it opens the door for further upside momentum. Let's take a look at the sterling versus US dollar. We'll look at the 4-hour chart in this currency pair. And if the break yesterday in this currency pair came on the breakout side of this trading range right through here. This trading range was in play for about a month and a half, maybe 2 months, a month and a half, where the price has stayed basically between the 126 and 128 level. We did have a little break above here. We did have a little break below here, but in trading yesterday, as you can see, the price fell below that level, and we saw increased selling momentum. That momentum took the price to the 38.2% retracement, a little below that level of this move up from the October low to the January high. That level comes in at 125.24. And as you can see, the price moved a little bit below that level, but then bounced back and moved back to the upside. And trading here today, the price what has been able to get back above the 200-day moving average. That's this green line right here. Currently, the price is trading right around the level at 125.60 is where the 200-day moving average current price is trading at 1.2558. So we're just below that 200-day moving average. That's going to be the barometer for this currency pair going forward. if we're able to trade more momentum above that level and get above the 145.71 level, that's the high of this swing area through here, then it probably opens the door for further upside, and we'd go and test, or potentially test the low of that swing area near the 126 level right through here. But if this break is for real, we cannot move back within that box. If we move back in that box, there's going to be a lot of disappointing sellers in this sterling versus US dollar. So be aware of that. But right now, we're just below that 200-day moving average, keeping the bears more in control. We'll see how it all plays out, but the sellers more in control in this currency pair. So there you have it. A look at 3 of the major currency pairs to start your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.